now I am joined by Peter Cardillo, Chief Market Economist, Spartan Capital Securities, to give his insights on today's global market scenario. Peter, thank you so much for your time. Let's look at what are the key factors that are driving the mixed performance in the US markets today. We saw them open at a positive note yesterday, but today that doesn't really seem to be the case.
Yeah, we basically were looking at a relief rally, but since the opening, things have changed, and I think the reason for that is, one, the Dow is under pressure, mostly due to the fact that United Healthcare is weighing on the Dow, and of course the other indices have now joined the Dow in negative territory. And I think, you know, it's the ongoing fear factor of the trade war. Yesterday, Fed Chief Powell basically threw some cold water on prospects of perhaps maybe the Fed being ready to lower interest rates. And of course, we saw the opposite happening with the ECB, which lowered rates by 25 basis points today, and basically indicated that the unknowns of the tariff situation could lean further on economic conditions. And so we have the contrast here between the Feds and the European Central Bank. And then, of course, you know, Trump tweeting that he basically can't wait for Fed Powell's time to expire, and so that creates even more anxiety, I think, in the marketplace. In terms of earnings, so far most of the companies have beaten market expectations, but of course guidance is missing, and that's all due to the uncertainty. So it's just the ongoing certainties of the tariff war, of the trade war, that's continuing to lean on confidence.
So, you know, Peter, we also saw the latest jobless claims data actually coming out, which did actually have some positive sentiment around it. But with the broader trends that we're seeing in the US economy, I'm trying to understand what it might mean for market performance in the near term, because there have been recession fears. But now that we look at the jobless claims data, would you continue to say that?
Well, you know, that was a mixed reading. Yes, jobless claims were lower by 9,000, basically staying within that range that we've been having here for the past several months. But if you look at the continuous claims, they were up. They were up by 48,000 to 1.885 billion. So that's a contrast in the sense that what we're seeing here is that there is some weakness developing within the labor market. And that means that more people are holding on to claims as opposed to people getting off of claims. So what does that indicate? That indicates that there are less jobs out there within the categories that individual might be looking for, and it's harder to obtain. So there's somewhat of a bit of a contrast. But there was another number that indicates some serious trouble in the manufacturing sector, and that was the Philadelphia Fed Manufacturing Index, which was off sharply, off 26 points from a gain of 6 last month.
Absolutely, Peter Cardillo, thank you so much for those updates. This is as well noticing a mixed sentiment across markets, and Asian markets also showing a mix of gains and losses. And thank you so much for the insights on how we can draw more investor sentiment and an understanding of that in the region.